Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I want to talk about UPS right now because it has just reported its earnings and is dropping, I think 6-7% right now. So I just want to quickly have a look at, they haven't released the full report yet, so they've just given us the headline. So I'm gonna use that to kind of explain what I see in this report and exactly what I'm gonna do, inshallah, moving forward with this company. Now, as you can see, there's a lot of companies reporting this week. So today, Pfizer just reported. I think they missed it on the revenue side of it, but there was nothing huge in there. GM is reporting. UPS, like I've said, is reported. AO Smith has reported. MSCI is another company that I'm actually looking at and just need to check what they've actually reported. Microsoft, AMD, Alphabet, all the big boys are reporting tonight. And then you've got Wednesday, you've got Robert Technology, MasterCard, and Thermo Fisher. These three companies I'm interested. I'm going to see what they're up to, especially MasterCard. Okay, I would love to see a drop of at least 5% from MasterCard, and that would be absolutely wonderful. Qualcomm is another company, of course, reporting Wednesday afternoon, so we'll keep an eye on that. Then we've got Merck that I own in this portfolio, as well as, of course, on Thursday we have an ExxonMobil and Chevron reporting. I do own Exxon in there. Now, so this is one of the probably important weeks for the earnings report. And what you see here, what is going to happen is some companies will report and then maybe miss one of the consensus from these analysts. And it just takes that bit of bad news to drop this basically the whole thing in, I don't know, 3, 4, 5, 6, 7%, just like basically UPS right now. I'm going to show you the numbers for UPS. I'm not just saying it's all great, but imagine if it had the reports on Friday and they missed top line, but everything is fine because there's a reason that why they missed it for this quarter, and the next quarter or the next year it will bounce back. People don't actually want to be in that stock because it reported one bad earnings report. And this is why for long-term investors, this gives us an opportunity. And I'm going to talk about now if it's an opportunity or if we should be worried about UPS. So as you can see, it's almost a drop in 7%. This is pre-market, so the market is about to open, I think, in about 2 hours. So what's happened? So this is what's happened. So UPS non-GAAP EPS of $2.47 beats the basically Bahai literally margin, and then revenue of 24.9 billion, and then that misses about 510 million. So they missed basically their revenue side of it. The EPS was just on basically what they were expecting. So what else has happened to the company? So the full year 2024 UPS expects its revenue to range from approximately $92 to $94.5 billion, and consolidated adjusted operating margin to range from approximately 10 to 10.6%. The company is also planning to expand basically expenditure of 4.5 billion and dividend payment of around 5.4 billion dollars. Of course, that's subject to board approval, and we'll see what happens with that. So moving forward is nothing huge to worry about. Okay, they did miss the top line. They did beat in terms of the EPS. So to me, this seems okay. So let's break it down and then talk about exactly what this means. Okay, so if I can zoom in. So this is the segment revenue. So they got the US domestic, they've got the international, and they got the supply chain solutions. Now, the US domestic, basically quarter to quarter, it was almost a 34% up from last year. So this time last year basically was up, from the last quarter. But from this time last year, it's down about 7%. Okay, so this is probably one of the reasons. Now, the international segment, more or less the same. Q to Q is actually fine. It's almost 9% up. For year to year, it's almost 7% down. And the supply chain solutions was 8.4% up to basically Q to Q, but at the same time, year on year is 11.4% down. So just because of that, that's basically why the stock is down. The company has not actually said any huge news and basically things are basically worse or whatever. It will be interesting to find out what the justification are for these drops. and a lot of it is because of the volume. So the volume is not there at the moment, and if they're not basically delivering as much stuff as they was delivering in the US and so on, because of recession, because people don't want to buy as much product and so on, and that might give us an indication because we're in a recession and people do not want to buy as much product as they used to before. So it will be interesting to see what they say. But for me, there's nothing to worry about. This sort of a thing happens. It might be this year that might happen, but the next year the company will bounce back. Okay, I've had companies like, for example, I've had Merck for a long time in the red for almost 2 years, I think, at some point. Okay, and almost for the last 2 years it's been in the green. Right now it's up 67%. If you watch my old videos, you will see me in the red. You will see me basically talking about the company, the fact I was buying it was undervalued and so on. And because a couple of bad quarters, people decided to sell this stock. Okay. And the other thing the company is doing is basically lifting its dividend by a cent to $1.63. Again, whether it's a 1 cent or not, it doesn't matter. It's the fact that they've actually increased it. Again, let's basically find out what the company has to say based on in terms of why the drop has happened. So once they actually done their presentation and they've actually done their earnings call, then we will find out a bit more information. But for me, this is just a little bit of an exaggeration. If it's only for this year, and what the company is saying is actually all right in terms of saying, okay, we're not really too worried about 92 to 94 billion dollars, okay, into 2024. I don't see any huge problems there. Okay, they're not a dying company. So let's have a quick look and just to kind of give you an overview of where the company is at right now. Of course, some of these things will change as soon as the company reports, but the dividend yield right now is over 4%, which is quite nice. The company is, of course, has a mega market cap, which is $135 billion, and the safety is 69%. Let's see if this changes after the earnings report has basically come out and they tell us what's going on in the company. 64% in terms of payout ratio. A little bit higher than I would like. Normally 60 and above is too high for me, but that's nothing huge to worry about. And then dividend streak of 24 years. Basically, right now we're looking at latest increase of 6.6% was the latest one. Right now we'll see what they once it gets updated, and 13% in the last 10 years, last 5 years, and the last 20 years was about 11%. So it's decent, it's average. This is fast, so nothing to worry about. But 13 years of increasing that dividend, this is 24 years of basically uninterrupted dividends. So they have been paying for 24 years, but they have been increasing for 13 years now, which is quite nice. And you get $6.48 of every share of this company that you own. Now I think it goes ex-dividend. I think they said, if I can find it, in the March or February, on record of February, 20th February. So if you're on record on 20th of Feb, then you should be getting your money. Now moving on to the dividend yield theory, like right now 3.33% is basically the 5-year average. 4.10 we've already seen, so it's higher. So that means probably by the time the stock drops today, this will be higher, because remember, if the stock basically drops, the yield goes up, and the stock goes up, the yield goes down. So they have that invert situation going on. So the forward PE right now, we're looking at the 5-year average. Basically, we're looking at about 16.1. Right now it's 17.5. We will see what happens after, but it's still cheaper than completely the rest of the sector. The payout ratio we've already seen, and the next year is going to increase a little bit, 72%. So we'll see what happens with that. Earnings per share is increasing up until 2022. It has declined a little bit, and again, I'm waiting for the next 12 months. It might decline, but I'm sure it will bounce back. This is a very cyclical business, because remember, if everybody has extra money, they'll go to Amazon and buy all this product. If everybody has extra money lying around, if people don't have actually extra money lying around, then of course they're not going to buy a lot of things from Amazon and other places, and this company benefits from those shipments and so on. So you will just have to bear that in mind. And of course, the situation in that Yemeni border side of things has also impacted a lot of these companies, because all the ships have now have to go around the world to actually get to where they need to be, and for that reason it has delayed and so on. Shares outstanding has been declining, and it's quite nice to see that. Total sales, as you can see, it's going up. Just the basic next 12 months, they're expecting to come down. Return on equity, we're looking at basically 47%. Return on invested capital, we're looking at about 20%, which is quite nice. And then operating margins about 11% right now, so we'll see after the report what happens. Free cash flow margin about 6%, and net debt to EBITDA for right now we're looking about below 3% is what we prefer. Right now is 1.21 right now, so nothing really huge to worry about. So in terms of ratings and all that, I'm not going to bore you with that, because that's going to change once people realize what's happened today. All these analysts are going to come out, revise everything they've said. These 12 strong buys will probably become 12 strong sells. We will see what happens. But right now, as we speak, $168 per share is what the price should have been. They thought should be by the end of the year, but let's see once they've done the revision and they come back to us, and we'll see what they say. According to also Morningstar, of course they haven't updated this yet, so once this was in October, so once it gets updated we'll see what they say. But $164 per share is where they think the price should be. Now I will be down quite a lot. I think right now I'm down about 8, but I think it has reflected, because it's gone down quite a bit. All right, so about £800 down, about 18-20%. And again, I am definitely not worried about it. The reason is because I genuinely like the business. It's not going to go out of business anytime soon, inshallah. What I'm going to do is basically start buying more of this company, inshallah, in the next couple of days. Of course, as always, I will share that on the Discord and the Patreon accounts, inshallah. So yeah, I'm gonna definitely start adding a bit more of this company. I think out of all the companies that I own, this is now done a lot other than this one. Anyway, I'm gonna get rid of this at some point, so I'm not really worried about this one here. But out of all the rest of the company, UPS is the one that's down a lot. So I will be buying more of that, inshallah, the next few weeks. Even though one of my biggest holdings is right now is in the industrial sector, I still think is basically, if I see companies like that undervalued at the moment, I'll rather buy them than actually adding to companies that have gone up so much. So technology, I don't think I will be touching anytime soon. So industrial probably going to take over, because there are a few companies on that list that are down quite a bit. Anyway, I'm going to stop the video here. Of course, I will give you a full update once we have the full report, inshallah. But I just wanted to share with you this news. And of course, keep an eye on the other companies. Like I said, MasterCard is on my priority list right now. So that's the company I would love to add back to the portfolio. So we'll see what happens when they report on Wednesday morning, inshallah. If it drops, I'll be starting, a new position, inshallah. And I will let you know what happens. Have a wonderful day. Assalamu Alaikum.